Hey there, savvy investors. Today, we're diving into a topic that's on everyone's mind, inflation. But we're not just talking about the here and now, we're looking ahead to 2025 and 2026. Why? Because protecting your hard-earned cash from the silent thief of inflation is a long game. And we need to stay ahead of the curve. Imagine this: you've got $10,000 stashed away, thinking you're set for a rainy day. Fast forward to 2026, and suddenly that nest egg only buys you $8,500 worth of goods. Ouch, right? That's the sneaky power of inflation, and it's still a very real threat in the coming years. So, why is inflation still looming over us in 2025 and 2026? Well, for starters, we're living in a world that is about as stable as a house of cards in a windstorm. Geopolitical tensions, energy market roller coasters, and supply chain hiccups are all keeping inflation on its toes. And let's not forget about central banks playing monetary policy ping-pong with interest rates. It's a perfect storm that keeps prices climbing. But here's the kicker: inflation doesn't just hit you at the grocery store. It's quietly nibbling away at your savings, like termites in the foundation of your financial house. That's why we need to talk strategy, and we need to do it now. Let's break down your options. Starting with the safe havens. Bank savings accounts. Sure, they're secure, but with interest rates often lagging behind inflation, you might as well be stuffing cash under your mattress. Bonds, both government and corporate, offer a bit more promise. They're generally stable, but don't expect to get rich quick. Think of them as the tortoise in the race against inflation. Now, what about the classic inflation hedge: gold and other commodities? It's not just for pirates and doomsday preppers anymore. Gold has a track record of holding value when currencies falter. But it's not without its ups and downs. As for real estate in 2025 to 2026, the market's cooling off. But there are still opportunities if you know where to look. Just remember, property isn't as liquid as other investments, so don't tie up all your cash here. Alright, let's talk growth. If you want to outpace inflation, you've got to take some calculated risks. Certain stock sectors have historically been inflation beaters. Think utilities, consumer staples, and energy companies, the stuff people need no matter what. ETFs and index funds can give you a slice of these sectors while spreading out your risk. And let's not forget about the tech and AI boom. These industries aren't just changing the world, they're potentially padding your wallet too. But a word of caution: high growth often comes with high volatility, so don't bet the farm on the next big tech unicorn. For the risk takers out there, alternative assets like cryptocurrencies, collectibles, and digital art are on the table. But remember, these are more like lottery tickets than steady investments. They could make you rich or leave you with expensive digital dust. Proceed with caution, and never invest more than you can afford to lose. Now, let's get local for a minute. If you're in the U.S., keep your eyes glued to the Federal Reserve. Their policies can make or break your investment strategy. For our European friends and those in emerging markets, you've got an extra layer to consider: currency risk. A strong dollar might sound great, but it can wreak havoc on international investments. So, what's an investor to do? Here's your action plan for 2025 to 2026. First, diversify like your financial life depends on it, because it does. Mix growth investments with stable assets. Think of it as building a financial smoothie, a little bit of everything for a balanced diet. Second, keep an emergency fund in stable, easily accessible assets. You don't want to be forced to sell investments at a loss just because life throws you a curveball. Third, get serious about budgeting. Cut those unnecessary expenses and redirect that cash to inflation-beating investments. Your future self will thank you. Lastly, stay flexible. The economic landscape can shift faster than you can say cryptocurrency, so be ready to adjust your strategy as inflation and interest rates ebb and flow. Looking ahead to 2026, the crystal ball is a bit foggy. Some experts are betting on inflation cooling down, while others are bracing for a comeback tour. Either way, your best bet is to prepare for both scenarios. A soft landing could mean steady growth, while a recession might require a more defensive stance. Remember, investing to beat inflation is a marathon, not a sprint. Patience and diversification are your best friends in this race. Don't get spooked by short-term market jitters. Keep your eyes on the long-term prize. Before we wrap up, let's recap the key takeaways. 1. Inflation is still a threat in 2025 to 2026. So start protecting your money now. 2. Diversify your investments across safe havens and growth opportunities. 3. Stay informed about global and local economic trends. 4. Keep an emergency fund and stay flexible with your strategy. 5. Think long-term and don't panic over short-term market fluctuations. Now, it's time for you to take action. Review your savings plan, start researching those inflation-proof investments, and build a portfolio that can weather the storm. Your future financial self is counting on you. Remember, the best time to start was yesterday. The second best time is now. So, get out there and start inflation-proofing your finances for 2025, 2026, and beyond. Your wallet will thank you. And you'll be able to sleep soundly knowing your money is working as hard as you are. Thanks for tuning in, and until next time, keep growing that wealth.